Great, thanks, Scott. And so far we have seen the importance of loan officers and importance of minority-owned banks. And next, let's look at how important it is to have a competitive banking industry for closing this racial gap. And we have Xiang Li from Boston College to present his sole-authored work.
Yeah, it works.
So, hello everyone, thanks so much for including me. I'm a finance PhD student from Boston College. Today my research topic is about bank competition and entrepreneurial gaps. The motivation is that entrepreneurship is very important because it can boost economic growth by driving job creation and innovation. Despite its benefit, there are still huge gender and racial gaps in entrepreneurship. If we look at the following figures, we can see women made up 47% of total labor force. However, 20% of business owners, they are female. If we look at their contribution to employment, these gender and racial gaps are even wider. So female entrepreneurs, they only create 8% of total jobs. And black entrepreneurs, they only create 1% of total jobs. Ideally, if we can reduce the gender and racial gaps in entrepreneurship, maybe we can drive economic growth and also reduce inequality in entrepreneurship. So given the importance of reducing entrepreneurial gaps, we need to understand what are the causes of entrepreneurial gaps. Lots of papers find that financial friction may drive entrepreneurial gaps. For example, if we look at Philly and Rob's paper, they find that the most important factor that determines the success of minority-owned firms is the lack of startup capital. So what kind of startup capital do entrepreneurial firms use? Rob and Robinson, they find that entrepreneurial firms rely heavily on bank loans instead of equity. So given the importance of access to bank loans, but minority and women, they are still disadvantaged groups in the lending market. They will face high rejection rates, higher borrowing costs because of information asymmetry, and also because of discrimination. Becker's discrimination theory predicts that competition can reduce discrimination by increasing the cost of discrimination in the labor market. So motivated by previous papers, my study wants to examine whether relaxation of financial constraints can reduce, whether bank competition can reduce the gender and racial gaps in entrepreneurship. So to answer this question, I take advantage of the staggered interstate deregulation law changes and build the state-level bank deregulation index following Rice and Strahan. Specifically, I will use the following two acts to build this state-level index. I will talk about these two acts later in detail. And also, I developed a new measure of discrimination using texture analysis by analyzing the narrative information contained in the complaints filed to the CFPB. So because of time limitation, I will briefly talk about the data set. I use the legal database Westlaw Law to examine the deregulation law changes and build a bank deregulation index. As for bank outcomes, I use FDIC and the CFPB database. So CFPB database is the largest official complaint database covering millions of complaints against banks. As for entrepreneurship outcomes, I use SIPB dataset. This dataset is longitudinal, so I can see the transition from non-entrepreneurs to entrepreneurs. And we can see lots of information like demographic characteristics and firm characteristics. Let me preview my main results. The first part of my result is about bank outcomes. I find that bank competition, bank deregulation can reduce the gaps in the quantity and the quality of banking services. As for quantity of banking services, I find that minority communities, they have lower branch density before bank deregulation. However, after deregulation, the branch density improves a lot. And this increased branch density will translate into financial inclusion of minority borrowers. It means minority borrowers, they are more likely to open bank account in these newly established branches. As for quality of banking services, I use the total number of complaints filed to the CFPB as a measure of the quality of banking services. I find that before deregulation, minority communities, they have lower quality of banking services. However, after deregulation, the quality of banking services also increases a lot because of the intensified competition. Finally, I built a new measure of discrimination using texture analysis, and I find that bank competition can reduce complaints about discrimination because of intensified competition. Then let's move to the second part of my results, entrepreneurial outcomes. I find that bank competition can reduce the gender and racial gaps in entrepreneurship in the following aspects, probably because of the improved quantity and quality of banking services, and also reduce the discrimination. So first of all, let's look at business formation. I find that in fully deregulated states, the gender and racial gaps can be reduced by 40% and 70% respectively. The underlying channel is that minority and female entrepreneurs, they can raise more skilled business debt and home equity loans to support their businesses. And I also want to show you that because of this improved access to business loans, the gaps in business performance are also reduced by bank competition. So I want to briefly show you how to build this bank deregulation index using two acts. The first one is the IBBA, effective in 1994. So following the passage, banks outside the state, they are allowed to enter the operator across the state line without any permission. However, states, they are still allowed to use the 4 provisions contained in this IBBA Act to restrict or increase the cost of out-of-state entry. So how to build this deregulation index? It is equal to 4 minus the total number of barrels. So 0 means fully regulated. It means it's really hard to enter a local market because there are lots of barrels. And 4 means fully deregulated. It means very easy to enter a local market. I use these 4 provisions contained in this table to build this deregulation index. So specifically, I will use, if the minimum age requirement is 3 years old or more, then I will subtract 1 from the index. And if a state doesn't allow de novo interstate branching, I will also subtract 1 from the index. Yeah. Then let's move to the second act, Dodd-Frank Act. So this act is effective in 2010. It allows out-of-state banks to do interstate branching as if they were chartered in that state. So it's a one-time shock. It is a nationwide act, so it is beyond the control of the state government and exogenous to the local economic conditions and the labor market. And it will impact states differently. It will only impact states that don't allow de novo interstate branching before the act. So how to measure its impact? I will add 1 to the index if a state doesn't allow de novo interstate branching before the act. Then I want to show you that minority communities, they are underserved by banks. The left figure shows you that there is a negative correlation between the total number of bank branches per 10,000 inhabitants and the minority ratio. It means minority communities, they have lower quantity of banking services at the county level. The right figure shows you that there is a positive correlation between minority ratio and the total number of mortgage-related complaints filed to the CFPB. So it means minority communities have lower quality of banking services at the zip code level. Then I want to show you the impact of bank deregulation on the bank services in minority communities. If we look at column 1, the Y variable is the log of branch density, and the X variable is the interaction term between bank deregulation index and minority community or minority individual. So if we look at column 1, we can see the coefficient of positively significant. It means a 1 unit increase in bank deregulation in minority community will lead to a 3% increase in branch density. And columns 2, 3, 4 means that a 1 unit increase in bank deregulation in minority community will lead to a 1% increase in the probability of opening a bank account, and also a 5% decrease in in complaints against banks, and the 3% decrease in complaints about discrimination. I will talk about how to build bank discrimination complaint. So here is the example of a complaint about discrimination. So we can see this complaint is against Bank of America. And if we look at the narrative information, we can see the consumers wants to tell us, I believe I'm being discriminated because I disclosed my race at blah, 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 and on section blah, and also I have excellent credit. So how to build a discrimination complaint? I will count the complaint as a discrimination complaint if the narrative information includes the following words: discrimination, inequity, prejudice, unfair. injustice, all the related words such as discriminating, etc. And let's move to the second part of my result. I want to show you the effect of bank deregulation on entrepreneurial gaps in the following two aspects. The first one is about business formation. The second one is about business funding. So I use the SIPP dataset because we can see lots of information and it is longitudinal. Column 1, the Y variable is the dominant variable equal to 1 if an individual I opens a bank account, transitions to be entrepreneurs from non-entrepreneurs within 3 years after bank deregulation. If we look at column 2 and column 3, the dependent variables are the log of secured business debt and the log of mortgage debt used to support their businesses. So if we look at these tables, we can see after bank deregulation, women and minorities, they are more likely to be entrepreneurs, and also they can raise more secured business debt and home equity loans to support their businesses. I also find some additional results. I want to show you that bank competition also reduces the gaps in business performance and also business equity, probably because they can get more access to business loans and home equity loans. And also, I also want to show you that bank competition can reduce the gaps in the disparity in access to PPP loans. These loans are totally risk-free. They are fully guaranteed by the government. So by doing so, it can eliminate the concern that my results are driven by the default risk of minority and female entrepreneurs. And I also want to show you this effect are stronger in states, in areas with high discrimination, which is consistent with Becker's discrimination theory. Bank competition can reduce discrimination. So the effect of bank competition will be more pronounced in states with high discrimination. So let me conclude. So in this paper, I take advantage of two important deregulation law changes to analyze bank competition's effect on entrepreneurial gaps. I find the following results. So first of all, I find that competition can reduce gender and racial gaps in entrepreneurship in the following aspects: business formation, business capital, business performance, and also business equity. The underlying channels are that bank competition can improve the quantity and quality of banking services and also reduce discrimination in the banking system. As for policy implication, my paper shows that it's very important to underscore the need for policy intervention aimed at the financial inclusion of female and minority entrepreneurs in the entrepreneurial financing market. And I also have some small suggestions, maybe not so correct. So for policymakers, I think we need to take advantage of the CFPB complaint database. So how to use this? Maybe we can use some texture analysis to detect and monitor discrimination complaint. And also, because not every consumer, they can use texture analysis like researchers. So maybe we can build a website to make complaints about discrimination more easily available to these minority consumers or minority borrowers. So if you need any technical support, I'm very happy to help and collaborate with you. And the third thing is that maybe we can educate and encourage consumers to fight against discrimination. So why this is important? Because filing a complaint about discrimination is much easier and also is free compared with filing a lawsuit. So it also has some spillover effects. So other consumers, they can also learn from and benefit from this discrimination complaint because they will get aware of this complaint about discrimination and also avoid discriminatory treatment. For bankers, so if you check your complaint about discrimination, if you have 0 complaint about discrimination, congratulations, you can market your bank or branch as a discrimination-free bank. And but if you have lots of complaints about discrimination, I think you are not intended. So maybe if we look at the papers in this panel, we can check whether your loan officers, whether they have lots of complaints about discrimination, and monitor your loan officers by improving the diversity of loan officers, and also by linking their compensation with financial complaints about discrimination. And also maybe we can look at the ownership of these banks by improving the diversity of the ownership. Finally, maybe if we want to make some entrance decision, we can consider competitors' complaints about discrimination information to identify underserved minority communities to find the market gap and grab the market share by serving this underserved market. So the final thing is that if you are interested in your bank's discrimination level or branch discrimination level, please feel free to email me. I can generate a report about your discrimination level of your banks for free. So thank you so much for listening.